All right, let's get right into it. There's a really strange case unfolding on Wall Street, and it's all about a doctor that isn't a person. It's a metal. We're talking about Dr. Copper and the serious warning it might be flashing for the market in 2026.
And just take a look at this. It really says it all. In 2025, the stock market had a pretty good year, up 16%. But copper prices, they went completely ballistic, soaring an incredible 42%. So what on earth is going on here? Why is so much money piling into this one metal?
To figure that out, well, we need to meet the doctor. This isn't just about supply and demand for some random commodity. This is about a Wall Street legend, an indicator that's been used to read the economy for generations. You see, on Wall Street, they have this nickname for copper, Dr. Copper. Why? Because it's used in practically everything, from our phones and homes to our power grids and defense systems. The idea is that its price is one of the best checkups you can get on the health of the entire global economy. It's like it has a PhD in economics. And for years, the diagnosis was super simple, right? If copper prices were going up, it meant the economy was humming along. You had more construction, more manufacturing, just more demand for everything. And if prices were falling, the economy was slowing down. It was a clear, reliable signal. But here's the big twist. Right now, Dr. Copper's diagnosis is, well, it's just plain confusing. And that has Wall Street really worried. The old playbook just doesn't seem to be working. And that brings us to this central mystery of this whole thing. I mean, if copper prices jump 42%, shouldn't that mean the economy is absolutely on fire? So where are all the celebrations? Why isn't Wall Street throwing a massive party? Yeah, instead of celebrating, a lot of folks on Wall Street are actually waving a red flag. They're saying this price surge isn't what it looks like on the surface. They think something else is going on behind the curtain and it's messing with the signal. So let's put on our detective hats. We're going to uncover the real story by looking at 3 hidden causes that are driving this bizarre situation. Okay, cause number 1. This isn't a big, broad economic boom. It's a very, very specific thirst for copper coming from one place: big tech. In the past, you'd see demand rising from all over the place. Not this time. I mean, look at this chart. It's wild. The Magnificent Seven, your Apples, Microsofts, and NVIDIAs, they now make up a full 1/3 of the entire S&P 500. And these are the companies building the AI revolution, a revolution that is incredibly hungry for copper. We're talking about data centers that need about 10 times more copper than older cloud infrastructure. So this demand isn't coming from the whole economy. It's from a tiny but super powerful group of companies. Now, for cause number 2, we have to talk about China. Here's the paradox. China's economy is actually slowing down. Manufacturing is weak, the property market is struggling, and yet they're buying copper like there's no tomorrow. So why? Well, it's all part of a huge strategic bet. This quote just nails it. They are not buying all this copper to build more apartments or factories right now. No, they're stockpiling it. The government is making a massive long-term bet that they will dominate the future of electric vehicles, batteries, and all things green energy. It's a strategic power play, not a sign of a healthy economy today. And that brings us to our third and final clue. And this one is all about government policy. Back in 2025, the announcement of new tariffs on imported copper sent a huge shockwave through the market, and it set off a very predictable chain reaction. And this slide lays it out perfectly. The second those tariffs were announced, what did everyone do? They went on a buying spree. Companies rushed to buy as much copper as they could before the prices went up. This created a huge artificial spike in demand. And the result? A sudden supply shortage and soaring prices, all because companies were stuffing copper into warehouses, not because they actually needed it for new projects. Okay, so we've diagnosed the problem. We know why Dr. Copper's signal's so messed up. But now for the most important part. What does all this actually mean for you and your money? Because we are at a major crossroads here with some serious inflation risks and big investment choices to make. So the first big risk for everyone is inflation. Plain and simple. When the price of a core material like copper stays this high, it makes everything else more expensive to make. The phone in your pocket, the car you drive, your home, even your electricity bill. Businesses have to either eat that cost, which hurts their profits, or, you guessed it, they pass those higher costs directly on to you. Which, of course, leads us to the billion-dollar question for anyone investing their money. What happens next? Is this price surge a boom that's just getting started, or is it a bust waiting to happen? Are prices going even higher, or are they about to crash? And right now, you basically have two competing camps on Wall Street. You've got the bulls, who say the AI and green energy revolutions are unstoppable forces that will keep pushing demand and prices through the roof. And then you have the bears. They argue this is just a temporary distortion. The supply chain will sort itself out, all those stockpiles will get used up, and prices will come crashing back down to reality. So, standing at this crossroads, what are some of the potential moves you could make as an investor? Let's break down a few ways to think about this, depending on which story you believe.
All right, this lays out some interesting ideas. If you're copper bull, for example, ETFs like CopyX let you invest in the mining companies themselves. If you believe in China's big green push, there's KGRN, but you have to remember that's a riskier play because you're also betting on China's slowing economy. Or if you think the real story here is AI's massive need for power, you could look at ETFs like NUKZ, which is a bet on the nuclear energy sector that might be needed to power all those data centers.
So let's wrap this up. What are the key things to remember? Number one, good old Dr. Copper is giving us a very confusing signal right now. Two, the huge demand isn't from a healthy, booming economy. It's from a few very specific tech areas. Three, China's stockpiling is a huge wild card. And four, tariffs created a temporary artificial price spike. But I think the biggest takeaway is this. In today's market, you just can't rely on the old indicators. You have to look deeper.
The strange case of Dr. Copper is a perfect example of just how much the markets are changing. If you want to keep digging deeper and stay ahead of these kinds of shifts, make sure you subscribe to the Stock Market Mojo YouTube channel.